Hey, 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 hey. Oh no, no, no. Welcome back, guys. Long time no see. You guys thought he was gonna take a day break? No, sir. It is 10:48 p.m. Your boy is cooked. He's about to take a fat bed session after this, but yeah, I posted yesterday. Yeah, we've been consistent, boys. I'm telling you guys, I really do want this as bad as possible, and I'm willing to show that. So we're gonna stay consistent. We posted 2 shorts today, and I wasn't gonna take a shortcut and say that was good enough. No, sir, not around here. So here's a video on trading. Trading's kind of hard because like trade recap counts as a trading video. So on the weekends, it's like I have to give value, even though my trade recaps are value. We'll get straight into it though. I don't want to bore you guys out too much. So today we're gonna talk about breaker blocks. My friends, like I'm adding breaker blocks to my what's called to my trading strategy, and I'm just like, yeah, it's I think one of the most powerful um confluence out there, but it really happens in my opinion. Yeah, I don't see it every day. I see it definitely every single week, 100%. I don't see it every day. But when it does pop, I always take it. And I'll show you guys a example as well. So breaker blocks are high probability hold on, give me a second, sorry. Hold on. What's going on? Breaker blocks are basically just high probability retracement zones used with high time frame bias plus liquidity objectives. Right? So the best entries are going to be on lower time frames, 1 minute to 5 minute, which with confirmations, fair value got, market structure shift, or SMT. Right? You guys really only want to trade breaker blocks and higher time frame biases after liquidity is taken or after clear displacement. Clear displacement is probably my biggest take on this. So if you guys want to write that down, 100%. Yeah, but breaker blocks are not entry signals by themselves. Please highlight that. Please, please, please highlight that. They are areas of interest. Okay, now getting into bullish breakers. A bullish breaker block is a bearish order block fails, gets displaced through, price breaks above it, retraces into the order block, which equals the bullish breaker now because it got displaced, and then from there just pew, right? It basically means like previous sellers are trapped, market re-enters the zone to rebalance, and the continuation higher is favored. Bearish breaker, bullish order block fails, price breaks below it, retraces into order block, which also equals bearish breaker now, right? And same thing for the bear scenario. Bullish order block fails, price breaks below it, retraces into order block, which equal. Sorry, no, I'm just reading this. Sorry. Previous buyers are trapped. Retrace provides sell side liquidity. Continuation lower is favored. Then if we want to go, oh, I do not want to buy mini Nasdaq. Not when it's closed. Right here, not every order block becomes a breaker. Context. Over pattern. I don't know why I'm missing the N. Breaker does not equal instant entry. There's an X and an equal sign because there's literally not the cross, right? So breaker does not equal instant entry. Drawing breakers without displacement. Ignoring liquidity raids. These are common mistakes, by the way. Ignoring liquidity raids, trading breakers against higher time frame bias. I think the biggest thing for any confluence is trading against a higher time frame bias. Honestly. Entering without confirmation. All right. If price didn't take liquidity, it's probably not a breaker. It's just a level. Put that in your book. Quote by Lucas. I seriously try seeing if that's a quote. I promise you, I just made that. I might make it seem like it's a lot better than it is, but yeah. All right. And then to finish off, breaker blocks aren't about lines on the chart. They're about understanding who's trapped, who's in control, and where smart money wants price to rebalance before continuation. All right. So I didn't write this down, but I'm gonna. I don't want to write it down, but if you guys want to listen, actually, how can I do this? I could put captions on this video for you guys if I could see. If not, try YouTube captions. Those should be good. But what's happening when an order block turns into a breaker is price trades back into an order block. Order block fails, which means it displaces through it. Liquidity is taken through the order block. Old support becomes resistance, or vice versa, right? If it respected the order block, it's resistance, and boom, bounces back up. If it disrespected the order block and then it comes back up, it's gonna act as resistance again, and then come straight back down, right? An order block is not magic. It's an area where institutions previously accumulated or distributed, and I'll show you guys. Like when price violates the order block, like cleanly, like good, it tells us the side lost control, like the order block side. That failure creates a breaker block, right? This is how ICT likes to describe it. Like breaker blocks equal failed order blocks, obviously. Market structure shift confirmation. Previous buyers become trapped sellers, or vice versa, if in case it's a bullish order block that becomes a breaker block, or a bearish order block that oh my gosh, it's like saying the Woody Chuck what and then right. Almost done, boys. A breaker block forms when price trades through an order block, displacing it, and then later returns to the same area from the opposite side. And I'll show you guys. Finish off here. What a breaker block means: control has shifted, smart money has reversed bias, and trap traders provide fuel. All right. Traders who bought the order block are now wrong. When price retraces into that zone, they exit at break even or get stomped out. That creates institutional fuel for continuation. And then I'll show you guys Trade Friday that I had my sell limit on, but your boy decided to take it out. So if you guys watch the trade recap, you guys know what I'm talking about. Here we go. So breaker block right here. Where's my box at? Here we go. Breaker block. You can go wick high, wick low. I like going body to body, right? Just tighter. You know, I don't want too big of a breaker block. Inside of this fair value gap. Boom. I think that first candle misses it, but have stops at the high of the breaker block or wherever you want. I'd go higher the breaker block, or you can go high of this body, whatever. The thing about order blocks and breaker blocks is price should not sweep it. It should totally respect it. It should not go past it at all, or else it was just not a breaker block, to be honest. It should not go past it, sweep it, whatever it is. Taps into it with a fair value gap. Breaker blocks are way stronger with fair value gaps, creating a unicorn setup. And then, I mean, beautiful. Breaker blocks, just beautiful, dude. Beautiful. See if I can find a bullish one. Give me a second. No, that's liquidity. Maybe. Doesn't get retraced into though. Breaks it, almost retraces into it. Comes higher. I mean, no, not really. I really don't even look for bullish order blocks. I need to start doing that, but this. So this order block right here. So gets up here, gets ran through here, but just yeah. All right, boys. That's gonna be it for the video. I could find one. I just don't think, since we've been bearish for the past few days. I mean, are we serious? Jeez, man. Been super bearish, so I don't think I'm gonna find one anytime soon here. If I went back into the market, could probably find one. But yeah, that's gonna be all for the video, guys. Thank you so much. Sales video is coming right after this. I'm gonna record it right now. Catch you guys later. Peace. God bless, and thank God. Seriously, thank God for everything. He is the greatest gift